Good morning, everyone. JR with Secure Metals with a quick look at the gold and silver market. Today is Tuesday, May 14, 2013. It is approximately 11:04 a.m. Eastern Standard Time. Just wanted to give you guys some quick pivot points here. So this is the daily gold chart. As of right now, we have already tested this fib level, like I said here on the previous video. I did expect to move here to at least 1423. We have seen the test. And now the question is, are we going to continue to go down a bit further? Now we do have this stochastic still pointing down. Volume is not too crazy, and of course still further room to fall down. Now the good positive thing is that this 20-day moving average is starting to curve to the top, or at least to the upside. That definitely is positive, but we are still below this 20-day moving average. So again, we can see these prices consolidate further. Your 50-day and your 100-day moving average are still above us. So again, not too positive here on the medium term, and of course on the weekly chart here. Excuse me. And of course on the weekly chart, stochastics are a bit confused. They were pointing up, so now they're starting to curve here to the downside. And at this point, really, these weekly charts are very, very, very slow. So it really just a matter of waiting and see how price is going to mature. Again, if I'm looking at this chart here, I would at least think that this is going to try to test this 1455. But again, we are seeing a little bit of a trend here, at least on a short term, where we're seeing we're basically seeing a high, another high, and another high, and of course another high. And if you notice on all these highs, lower high, lower high, lower high, lower high. And of course, if we're looking at the lows, we have low, 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 and this is the first low where we don't necessarily create a new low. So at this point, it looks like this 1423 level might hold, but again, then you have your 20-day moving average here on the 4-hour chart. That might hold it down as well. So again, we would want to see if this trend is going to continue or if this is going to reverse from here. A lot of buying pressure here on this market. So again, I think all these dips will be very well supported. I think if it comes down here to 1384, I think it'll be very well supported here around this line. But again, like I said on my previous videos, I mean, ultimately what we're looking at is we're looking at this metal to hold roughly between this area here, especially with the buying that we've seen here the last couple of months. I mean, a lot last couple of weeks, actually, a lot of buying. I mean, just a tremendous world. I mean, we're breaking records here practically every day on the demand here. Okay, and of course, if we're looking at silver, same thing for silver here. We are starting to see a little bit of a curve. The Bollinger Bands have come together, and I've said it before. Anytime we see these Bollinger Bands contract the way this one has contracted, you saw the big bubble, and now it's starting to go sideways. Of course, anytime we see that, we'll be looking for a big breakout to the upside or the downside. I'm assuming we're going to see a breakout to the upside, and I'm hoping, of course, that this level here between 2250 all the way up to 2342 is going to hold, and we can take this thing back up to the 61% Fibonacci retracement, at least to 2574. Before we start testing this 50-day moving average. If that's the case, again, a lot of momentum, and we're going to be held down by this trend line here. This is where it would be, and of course this one would be somewhere around here. So again, I would look to find some resistance between I would say anywhere between 2550 all the way up to 2630. That's really where we're going to be looking to find some resistance, at least for now. So again, guys, on the weekly chart, stochastics are, trying to make up their mind. They don't know whether to go south or north. And of course, it's really just a matter of just holding off a little bit. We don't want to get too aggressive as of right now, because again, I did some ratio. As a matter of fact, I did some ratio analysis, and the ratio analysis does look like the ratios are going to continue to go a little bit higher. Anytime ratios go up, prices usually go down, metals prices usually go down, and anytime ratios go down, prices is usually bullish for the metals. So as of right now, given that we're in this bit of a triangle, still being held down by the 20-day moving average, again, we do have to look out for a further move to the downside. So I wouldn't get too aggressive right now. Definitely a great time to buy in long term, but I wouldn't definitely be too aggressive here, because again, still further room for downside. But again, it does seem that every time we see a dip is very, very well supported, at least at these levels. All right, guys, and that's about it. I just wanted to show you that. If you guys want here, you want to tune in, and I'll do a quick Dow Jones analysis if you're interested in that kind of stuff. So you see this formation. I've been talking about this formation, and this is why I'm eyeing the high 15K range. I've said it before on the previous videos. This weekly chart here is forming a giant, actually on the monthly chart, which is even slower than the weekly chart. But this is forming a giant, I mean, just a really, really, really big broadening formation. This is a technical formation, and what you see here is you see, let's see here, you see a high, you see another high, and this is another high. So the prices are basically, you're having higher highs, and you have lower lows. You have a low here, a lower low here, and you have another low here. This is called a broadening formation. It's not the most bullish formations. Not the most bullish formations at all. This is actually a bearish formation, and I would anticipate that these prices are most likely going to zigzag, maybe continue to go up. Maybe you'll see a little bit of consolidation coming back down to at least 1380 before continuing to go higher. Maybe it'll just continue to go higher from here. It might come over. These bearish broadening formations do have a tendency to play around a bit over this line here. So we might see maybe 16,500, maybe even 17K, who knows. But definitely I do expect a move, a big move to the bottom. I definitely do expect a big move to the bottom where we can test back the 13,000 range, possibly even the 12,000 range. And who knows, maybe we'll see that recession in 2015, 2016 that we anticipate, because again, we are seeing a market rally on absolutely no economic fundamentals. There's absolutely no economic growth, so I just don't get it. But I think that's the question in everyone's hands. As a matter of fact, the floor traders at the exchanges were set to wear these 15,000 hats, Dow hitting the 15K mark, and some of the traders were taken off the one because they felt that there's absolutely no economic fundamentals backing up the 15K, so they weren't necessarily happy about it, and they're saying that really what we should be at is much lower. They were taking off the one, making it 5K Dow Jones. So interesting that this is the mentality that we have, and that's very important because these are the traders at the floor. I'll show you this formation here, how this came together here in the, I believe it was the Australian dollar versus the, yeah, this is that bearish formation again here. I saw this the other day, and this is what happened with this formation. Let me delete all this, and just like the formation that we saw, just like the formation that we saw on the Dow, this is exactly the same formation that we saw here. So again, prices came up, and look what happened, and then you saw the big dip to the downside. And this is a broadening formation where you have high, 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 and high, and you have lower lows after lows. So again, interesting formation we're seeing here on the Dow. Again, it's on the monthly and on the weekly chart, so I do not expect this to come together anytime soon. This is a daily chart. This actually came together within about a month span. actually a few month span. But again, this is the monthly and the weekly chart that we're looking at the Dow Jones. So again, we could see much higher prices before we see that big dip that I'm talking about. As of right now, I think we have rallied a bit, and I think it would be healthy if we see a little bit of a dip to the downside, maybe come back and test this 14,000 level, possibly even lower, maybe the 14,000, maybe the 14, the low 14, possibly even the previous high around 13.6. Again, if we do the math on these types of dips, they're usually 17% dips there. You got an 8% dip here. You got another 8% dip there. If the case would be that we see a dip around here, we might see a dip down to definitely the low 14 areas, because that would be your 9% dip. So again, these dips are averaging about between 8 to 13%. So again, I would expect a little bit of a dip to at least down to the low 14s before continuing to go higher and hit those marks. I did find also something interesting. The Fed is buying more mortgage-backed securities than we all anticipated, and they're actually creating a surplus. So again, there's going to be a lot of money left over from the stimulus, and that money might go into the stock market again, further strengthening this this huge bullish trend that we have. And again, who knows, it might even hit 16,000 before the dip that I'm anticipating. All right, guys, that's about it. Hope you enjoy the video. I'll see you next time. Bye-bye.